Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
So, anything happen since Thursday's show? Oh, boy. Today could be one of the days where we may have to go over 15 minutes. But we'll see. We'll see. All right, welcome, everyone. Monday edition, Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, loan officer at Town Bank Mortgage, right here, Wilmington, North Carolina. We break down the top stories that are impacting mortgage rates right here in Wilmington. We try and do it, and I've been pretty successful, 15 minutes or less. Today, we may go over that just because of sort of the more complicated nature of the issues at hand. So really just two main issues. We had a story break, I think, Thursday night, and then a story that broke Friday night or Sunday night. So let's start with, I remember when, I think it was Ben Shapiro. Ben Shapiro, in Trump's first term, had this thing he called like good Trump and bad Trump. Because Ben Shapiro he wasn't a never Trump, which is someone that thought everything that Trump does is bad. And he wasn't like an always Trump where everything Trump does is amazing. He was like, I'm going to judge him on his actions. So if he does something good, I'll be like, that's good, it's bad. So he had good Trump and bad Trump is what he called it. And there's probably no better example of that. What we saw over the last 4 days. So we'll start with the good Trump, right? We'll start with the good Trump. So on Thursday night, it was announced, reported, I can't remember. I think Trump put it on social media, on Truth Social, where he said that he was directing Fannie and Freddie to buy $200 billion worth. Instead of sitting on cash, use that cash to buy mortgage-backed securities, which would help lower rates. And I actually thought that was a great idea. I mean, it's Fannie and Freddie already buy mortgage-backed securities. In fact, there was an article in December, a report, I think Bloomberg, that said that Fannie and Freddie had increased their purchases of mortgage-backed securities, and the possible result of that could be lower rates. And essentially why, and we've seen that really, actually. I mean, since that announcement came out, there hasn't really been any economic data, and yet we've seen the 30-year fixed-rate mortgage seen quite the dip. There was a lot of reports on Friday about the 30-year hitting 5.99%. Some lenders, I think, hit 5.99. Mortgage News Daily, which has like sort of a running daily index of mortgage rates, they had the 30 dropping 15 basis points on Friday and then 5 basis points today on Monday. So they have the 30-year fixed at 6.01%. Like I said, depending on the lender, some, dropped rates on Friday, then kind of raised them up a little bit. Some dropped on Friday and then raised them a little bit today. So there's kind of a little bit all over the place, but there's no doubt that over the last 2 days, if you're comparing it to Thursday, pricing has improved. We are seeing lower rates. That is definitely true. And a lot of that's, it's interesting. It's happening while the 10-year is not really moving that much, because what we're seeing happen is the spread between the 10-year and the 30-year has contracted. So historically, the spread between the 10-year and 30-year is 175 basis points. During the COVID, kind of the ending of COVID and just the real estate boom, I think we saw like a little bit of a contraction. And then when inflation took off and rates skyrocketed, we saw the spread also skyrocket, which is why mortgage rates kind of went parabolic, where they went even higher than I think some people were expecting, because it wasn't just rates going up, but it was the spread that also increased. A lot of that had to do with risk premium and just sort of the nature of the bond market and investors and everything like that. And so a lot of people in the industry have said, we don't really need the 10-year to fall, because 4% is not a bad 10-year. What we need is that spread to contract. And so what this mortgage-backed security purchase is doing is contracting that spread. And so I think it was, what's the guy from Resi Club? Oh, I'm totally blanking on his name. I can see his picture. He said, I think the spread on Friday had fallen to like 185 or 190 basis points. So we're close, much closer than the 300 that we saw during the pandemic. And so this was a good move. I mean, this was one of the better arguments that I've seen from President Trump and his administration. The 50-year mortgage was kind of a dumb idea. It got everyone, kind of laughed at it. Portable mortgages, assumable mortgages are just kind of gimmicky, and it would only apply to new mortgages, which just wouldn't be who wants a portable mortgage at 6.5%, 7%. I mean, 3% sure, 4% sure, but if mortgage rates don't fall, because once again, in order to get a rate, and make it assumable or portable or whatever, you probably have to be a little bit higher to match that new sort of risk that would be involved in that loan. And so it just doesn't make sense at this higher rate. So all those kind of gimmicks got kind of laughed at. This was one that I was like, oh, that's actually a good move. Even though there's an article in December about Fannie and Freddie already increasing their purchases to, I think, $55 billion of mortgage-backed securities, $200. It's going to have an impact. It's not going to be huge. I mean, anyone that thinks it's going to be like monumental, it's just not. I mean, the mortgage-backed security market's $12 trillion. So $200 billion is a sizable amount, but still not huge to the point you're going to see a massive change in rates. But it could be enough that it could, we go from 6 1/8 to a little bit under 6. I think getting to a 5 handle, I think is kind of important for the housing market. So that was a great move. I saw that. I said, this is great. I'm so glad Trump made this move. That was actually a good thing. I said, good, Trump. This was good. This will help the housing market. So that was on Friday. So talking about it on Friday, I was like, ooh, we're going to talk about this on Monday's show. So I was doing some research on it. Everything was good. And then Sunday night, I was talking to a buddy of mine on the phone, and I get a alert. And I said, oh no, the New York Times breaks this story that President Donald Trump, well, it's not President Trump, but we know who's directing it. The Department of Justice announced they were opening a criminal inquiry into Jerome Powell, which is like just crazy to say. Like Jerome Powell, like the most, like straight-laced guy, you could possibly imagine. The fact that like they're looking into him. He's a current Fed chair, and it was sort of immediately known what was going on. And what was sort of kind of surprising by this, obviously this is crazy that the Fed chair is being looked at, but then Jerome Powell released a video. So the New York Times breaks this story. DOJ's opened a criminal inquiry into Jerome Powell. And so pull back for a second. The criminal inquiry is looking into his testimony in front of Congress. So the Fed chair testifies in front of Congress, I think, quarterly, talks to the House, talks to the Senate. And if you remember, there was an issue that Trump kind of brought up back in the summer about these renovation costs they're doing renovations on the Eccles building, and then one of the other buildings in DC, the Fed owns. And Trump was kind of making a big deal about this. I'm assuming he was talking to people in his orbit and was like, can I fire Jerome Powell? And I'm assuming someone like Bessent, who's a very smart guy, knows how markets work, was like, do not fire Jerome Powell. But no, you can't fire him. No, you can't. You can't do it. And the Supreme Court's pretty much alluded to, like, you can remove anyone you want, but you can't remove the Federal Reserve president, the chair. You can't remove him. Unless, and I'm sure some people in his orbit were looking to try and find a loophole, and it's like, oh, you could always remove someone for cause, right? That's sort of what they would have to Lisa Cook for. She lied on a mortgage application. That's the cause. We want her gone. So if you have a cause, you can get rid of something. You can get rid of the president if you have cause. If the 25th Amendment is very clear about the president's incapacitated or something, but that's the cause. You can remove the president. Duly elected president, 25th Amendment. Cabinet can remove him. You can remove cabinet members. You can remove anyone. No one is, Powell said this in his video he released. No one's above the law. So you can remove the for cause, but you need cause. And so I think the president and his administration sort of approached the overages as like, oh, look how bad Powell is with money, and look how bad he's handling this project. And so that's the cause. And everyone kind of went, that's not really, cause to remove someone. And so I guess now someone, and by all reports, it looks like supposedly Bloomberg did an article and said that it looks like Bill Pulte is the one that's been in Trump's ear. That's his FHFA director, who's been kind of a tack dog for Trump. He was the one that also brought him kind of the assumable mortgages, portable mortgages, 50-year mortgages that Trump got really mad about because everyone kind of laughed at the ideas. And Pulte said, this is the way that we're going to solve everything. So now he apparently has gone to him and said, like, you got to go after, you can go after Powell for his congressional testimony. Because remember, when you testify in front of Congress, you're swearing in under oath. And so just like being in court, when you're testifying, you're under oath. And so if you lie, that's perjury. Now, perjury, of course, is a big charge. Now, what's funny about this is that, we've heard people about getting prosecuted for lying to Congress. I mean, how many hearings do they have a day on Capitol Hill? How many hearings have you seen? I know I've seen a bunch where I'm like, that's straight up lying to Congress. Like, it's not something that gets prosecuted because it happens so frequently and often. And so normally when it is prosecuted, it's mostly because they're looking for a reason to go after someone. So Pulte has somehow convinced Trump that Powell lied in his testimony, that he said the cost was going to be this and it was actually this. And so he lied to Congress. That's how you can get him. And so they're going after Powell for basically lying under oath, which I still think is a hard argument to make. I mean, if you're like, these are what the costs are going to be for this construction project, anyone in real estate who's worked on a construction project knows that it's never going to be the actual number. And if we started holding people to like that number, bye-bye construction, because it's like you're always going to have something pop up, something happens that's wrong. All of a sudden this product now costs more money. I mean, just it's like, here's an estimate, and you go over the estimate. Sometimes you're under the estimate, but it's, the idea that he lied, like knew the number was actually more, but lied anyway. So it's already going to be kind of a tough sell. But Powell came out and released a video. So not only do we have the sort of unprecedented nature of the DOJ looking into the Fed chair, we then also have the sort of unprecedented video that Powell released where, he just straight up said, listen, this is not about the Eccles building. It's not about renovations. It's not about my testimony. It's about me and the committee. Because remember, it's not just Powell. Powell's not like a dictator who just says, here's where rates are. There's a committee that votes on what the federal funds rate is. And so he's like, the president is not happy that we are not lowering rates. Now, remind you, they did lower rates 3 times. And what actually makes this even crazier is there's this sort of myth out there that Jerome Powell is some sort of bulwark against Trump and that he's blocking Trump from having lower rates. Nick Timiraos reported on this after the last Fed meeting. Jerome Powell is the reason they got a third rate cut. There were members who sort of quietly protested by setting the dot plot in the release higher than where the federal funds rate ended up being, because they didn't want to lower rates. Powell talked them into lowering rates. That's what Nick Timiraos, the Fed whisperer, who knows all that is happening with the Fed, said that Jerome Powell was the reason why they got a third rate cut. And so Powell's not a bulwark. Powell's the reason Trump got a third rate cut. So everyone that's like, oh, Trump hates, Powell, and they're sort of making Powell out to be this sort of never Trump kind of he's not an anti-Trump guy. Once again, Trump appointed him in 2016 or 17. And he's the reason that Trump got a third rate cut. Even if he might not have necessarily, he was like, this is what we're going to do. So need to keep that in mind as well. Powell releases this video and says, Trump doesn't like the fact that we're not cutting rates more. And so that kind of surprised me. The reaction that we've seen, markets are not actually reacting. I think they're kind of just hoping this is going to go away because of how bad it's playing. Pretty much every Fed chair, we got Bernanke, we got Powell, Yellen. So we got Yellen, Greenspan, Bernanke have all come out against it. Treasury Secretaries Henry Paulson, Timothy Geithner, Robert Rubin, Jacob Lew, economist Glenn Hubbard, Kenneth Rogoff, Jared Bernstein have all said, like, this is horrible, don't do this. There's been a political move as well. Senator Tom Tillis in North Carolina, he's come out and said, not only is this horrible, I'm not even going to vote for a new Fed chair, even when the term is up, until you squash this or get this all figured out. And remember, Republicans only have 53 seat majority. And Powell's term is up in May. Now Lisa Murkowski has come out and said that she's pretty much on board with Tillis. So now the Republicans only have a 2-vote majority. I mean, if one vote, and they can lose one more because a 50-50 tie means J.D. Vance can break the tie. But I don't even know what happens if they don't vote on a new Fed chair. I don't even know. I don't know. Like his term ends and there's no Fed chair because they're not voting for it. Does he just stay there? Because actually his term on the board is not up to 27. So does he just stay on there as Fed, or does the seats stay open? Or I have no idea. I don't even know if there's like a precedent for that. I mean, there clearly is not, I would think. But so I don't know. But so this is bad Trump. This is bad Trump. This is not good. Like I said, markets didn't really react, so that's good because you don't want to mess with bond markets. You know, to quote James Carville, who famously said, when I was growing up, I used to want to come back as a baseball player or a lottery winner or a president. But now I've realized that I want to come back as the bond market because the bond market can intimidate anybody. And so we didn't see a lot of reaction today. 10-year didn't move much. The 30-year was down a little bit, mostly because of some of those, mortgage-backed security arguments that were made last week. But the bond market's like, all right, we're just going to pretend this isn't going on. This is hopefully going to get solved. But yeah, I mean, people think, oh, it'll be great. Trump will put someone in there and he's going to lower the federal funds rate. And then, of course, mortgage rates are going to fall. That's not necessarily the case. Well, car loans and credit cards and other things are tied to the federal funds rate, prime, and the prime rate. Mortgage rates are determined by the bond market. And the bond market only cares about inflation. And so you could have a scenario where they cut rates for, credit cards and other, car loans and other kinds of borrowing, which would have sort of a stimulating effect on the economy. It could possibly cause inflation to rise. And if inflation starts to rise, bond investors are going to demand more return. So you got the 10-year at 4%. We get the 30-year at 6%. Inflation's right around 3%. If inflation goes to 4%, the 10-year is going to go to 5%, 4.5%, 5%. The 30-year is also going to rise. And so that's the potential problem that you could have where we cut rates, but that then causes inflation to go up and then mortgage rates rise and not fall. Especially if bond investors don't feel that the Fed is now doing what is in the best interest of bond investors and what's actually happening with the economy. So this is not, best case scenario, and I think it was John Arthur's, Authors had a piece today in Bloomberg where he's like, there's no upside to this. It's all downside. Like there's nothing good. Like Powell's not leaving. There's now the possibility that Trump might not even get his guy in there unless he figures this out and basically ends this investigation. And the downside is bond investors lose faith in the bond market and then, oh man, rates are going to jump. So it's like best case scenario is nothing happens. Worst case scenario is rates go up. And so that's why a lot of people, myself, are like, let's just hope this thing is over and ends very quickly. But this was bad Trump. This was bad. This was not good. This is bad Trump. So good Trump, mortgage-backed securities, buying them, that's, on board with that. Bad Trump, threatening the Fed chair with a criminal investigation. Bad Trump. That was not good. So good and bad Trump as we start a new week. What's crazy is we got an inflation report tomorrow and no one cares because this is clearly a much bigger story. So we do have an inflation report, the first full report since the shutdown. And, I don't know. We'll see what the impact is. Oh man, if those numbers are up. Tomorrow could be interesting, but we'll be back tomorrow. And I did go over my 15 minutes. I think I'm allowed with the sort of unprecedented big stories happening. I think I'm going to allow myself that to happen, but normally under 15 minutes. But you guys enjoy your Tuesday. We'll be back here for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. Buy real estate and wait.